It's Friday, September 30th, and that means it's account update day. So after I take you through all the positions, I'll do some market commentary. And let me warn you, it's brutal. There's a lot of red on the screen, so prepare yourself. If you're into loss porn, you've come to the right place. So this is the account. I'm sitting at 147,790. Definitely a lot worse than most people today. If it wasn't for Apple, though, my account would have been green. I will go into the relative performance in a little bit, but first I'm going to walk you through the options and the equity positions, which will be listed on the right. I'm going to scroll quickly. Feel free to pause the video player at any moment to try to figure out the exact position that you want to read into. All the information is into this little square or rectangle to be mathematically and geometrically correct. Scrolling down now, you'll see that there's a lot of green. Most of it is because I'm selling stuff. Like calls and puts, but there's still a lot of red on all these calls because actually on some of these higher calls, because the ADRs, the Chinese ADRs, have like call credit spreads, right? So the top line will go down, the bottom line will go up, etc. It's not called line, but anyway, moving into the equity positions. We'll skip the whole options thing, okay? Doesn't matter. Well, I mean, it matters a lot, but until it starts making money. For right now, it doesn't matter. So, equities, Apple is my largest and best position still, although it's going to be challenged by Smith & Wesson pretty soon. It was down 3.48%, underperforming all kinds of metrics, markets, and quite frankly, like I always say, I'm not a technician myself, but there's been a lot of technical damage on the chart. Like it's slicing through all kinds of levels, support levels, all kinds of indicators, and it's just looking really, really, really bad. And not only that, but Apple is one of the biggest components of most indices. I mean, I don't know the exact percentage, but it's like more than 2% of the S&P or something like that. It's by far the biggest company in the US. And in fact, I think it's now the biggest company in the world as well. I think it's bigger than Aramco. Correct me if I'm wrong. Actually, Aramco might be bigger now because oil has been doing really well, and it might be over 3 trillion. If I wasn't lazy, I would actually Google it, but you know what? It's irrelevant. Let's continue. So realty income was up 1.37%. Main Street Capital was up 3.43%, including the aftermarket. Paramount was about even, up 0.69%. So everything's somewhat in the green. Smith & Wesson was barely in the red. It spent most of the day in the green, but then it decided to go for a dip. And now it's what? So into the account tab, investing tab. So I'm controlling $896.94, $109,106.52 of it is debt. I owe this money to Robinhood. I'm investing with Robinhood's money. They're going to want their money first. If my account keeps dropping and I reach this magical level here of 110, in fact, it's going to be more than that come October 21st. So if the market decides to take a big dump in October, I'll be broke. Well, I'll probably survive because I'll just sell everything and convert to leaps. But so I'll probably survive unless the bear market lasts for like 2 years, in which case probably will not survive. But that's okay. That's the price you pay to make money, right? So 109 leverage might be more. It says 42.47%, but you got to double that because at 50%, half the money is borrowed. Therefore, I'm 100% leveraged. That's how that works. Now, moving on to the stocks themselves, rated by total return. Apple is still somehow magically in the positive. $97,000 now. It was like 118 not too long ago, so I've lost like $20,000 just from Apple. Realty income is second, losing only $1,300. Main Street Capital losing only $3,178.76. Paramount losing a average amount here of $11,581, and then Smith & Wesson, the champion of all losers at the moment, $20,000 minus. Second largest position though, Apple at 97, Smith & Wesson's 83,000 almost. And then Main Street Capital 30, Realty Income 23, Paramount $22,000. So yeah, I mean, it's not good considering, look, Paramount, like I've lost 11,000 and I have 22, so I've lost a third of my position already on Paramount. I'm sure there's a lot of people that have lost more, but that seems like a lot to me. So those are all the positions. Let's go to the investing tab again here, and let's compare the account's performance to the market, because we all know that it's going to look like crap. So today I was down 1.82, not including the aftermarket. And then 7.66 on the week, minus 23.29 on the 1 month. So that's a lot of red. Okay, that's a lot of red. It hurts to see it, but that's like $45,000 almost. 3 months chart minus 16.6%, which is also pretty bad. Year to date is painful as well, 20.57. So these are very red. The 1 year, I may be beating the market in the 1 year though, because of this rise here in late October last year. Hopefully the same thing happens again. I'm actually expecting the market to bottom somewhere around October 13th. I may discuss the reasons for that later in the video. And this is the all-time chart that you guys always like, and I don't know why many of you have a fetish with this chart, but the all-time chart I don't like to show it because I have to explain it all the time. I have to tell you that I started investing in 2018 in August 28th, and that's why the chart looks so flat in the beginning. But this is the all-time chart. See, it's nothing. I started investing here, started adding some money, and this is the performance all time. I'm still up 104.63%, so compare the 5-year chart on the S&P to see how that goes. But first, back to the day performance, and let's see what the SPY has to say about that. SPY is just a proxy for the S&P 500. It's an ETF. It's an exchange traded fund. It just tracks the performance of the best, most liquid, most profitable stocks listed in the in America. I guess maybe NYSE. I'm not sure. I think any American exchange. Okay, so and it has to be an American founded company, I think. I don't know the exact rules, but something like that. I know they have to have like at least 4 profitable quarters. They can't get kicked out of the S&P 500 index. So anyway, and size matters. So SPDR S&P 500 ETF. So we're looking at a 1.54% loss on the day. So that's better than me. On the past week, they're doing a lot better. The market is 2.33. 1 month, I'm losing big to the market. So I'm down like 20-something%, right? 22%. Market's only down 8.89. And then the 3 month, I'm also losing on the 3 month. 1 year, I'm winning. So on the 1 year, I'm doing better. 17.92% down year over year, and I'm down like 7% or something. So I'm doing 10% better than market, which is still good. But as of late, I've just been performing so badly, mainly because the extreme drop in Apple that I didn't really think the investors are going to read so much into the performance here. I'll talk briefly about Apple. I didn't think that investors would read so much into the numbers when it comes to the production. They basically gave a guidance for producing as many phones as they did last year, but then they increased and then they took the bump back down to their expected production. And so what happened was the market took it as like, oh, they're not going to sell any phones, but that's false. I still maintain that Apple will sell record Pro phones, not the regular version. The 14 Pro will sell the record amount of 14 Pros over this holiday season, and it will be reported next quarter next year. So that's my bet. I'm betting on it, but apparently investors don't agree with me, so I may be wrong. So far, it looks like the stock price is taking a nosedive, but we'll see. So anyways, that's the 5-year chart here is up 43.64%, which is less than my 5-year chart, or at least all-time chart, which is about 4 years, which is 104.63. All right. Now that is the entirety of the account, and as you can see, I don't have any more buying power. I've used all of it up. I've been scooping shares of Main Street Capital, and now have 911 point something. So I have 911 shares. That comes out to quite a bit of dividend. So we'll see. I would do the math right now, but okay, let's do it. Well, anyway, it's just like 7 point something percent. It's 7.66% dividend yield. So it's quite a bit. I mean, if you have $100,000 invested in Main Street Capital, you'd be receiving $7,660 for your efforts of owning that fund. So it's really good. All right, that's the review of the account. Thanks for watching, etc., etc. Hopefully you guys are doing better than I am. It's not going to be very easy to, I'm sorry, not going to be very hard to do better than I am if you're just following the market. So congratulations on your not so big losses. And I'll end it out here. Probably make another video later, like a company review over the weekend. So watch out for those. All right, peace out.